Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for November 28th. We're halfway through the week. Did the market respond well to Powell's speech or what? That's a rhetorical question. Not much else to say than that, right? Big day in the market for sure here today, as pretty much everything, unless you're the dollar and crude oil, was able to close up fairly well. Yeah, utilities weren't able to, but pretty much everything else. Flat day for utilities, down day for crude. What else is new? And the dollar, of course, pulled back as the market tried to read the tea leaves of Jerome Powell's speech. We'll see where it goes, but at least for today, Ed, hello. At least for today, we're feeling pretty good, if we're bulls. So at least, we were kind of in that bullish swing, right? We kind of saw a few things, even on, we kind of had a few days this week to start us coming off of support, most notably. So we weren't right in the middle of a great bearish retracement to have maybe this news take some trades out. I'm just taking a look ahead to tomorrow. The only S&P company, or S&P 500 company that we have reporting earnings is Dollar Tree. So another light day going into tomorrow's open. Just taking a look here, these are our top performers here on the S&P here today. Salesforce did have their earnings last night, I guess, before today's open. Very strong report and ran up pretty nicely. One of the things I always like to do, is kind of browse who's doing what, gainers and losers. Take just a quick bird's eye view of their charts to see if there's anything that might be all that interesting to me. So, UA, just as a quick example, we can kind of see that they're kind of potentially at least threatening a bullish breakout. I'd want to take a closer look at a chart. I couldn't ever want to make a chart off of this tiny little bird's eye view chart, but it can give you some trade ideas, I think. You can kind of look at the top gainers, top losers, and things of that nature. So always fun on a day like this to do stuff like that, no doubt. If you're short on time today, let me just say the bulls won. But no, we'll take a closer look at it. One thing that I am very, happy, thankful, whatever you want to call it for, is the way that this developed. I'm not going to pretend to know for 1 second that I knew that the market was going to, how it was going to react, if it was going to react at all to Powell's, speech today. That certainly appears to be the reason, although there doesn't have to be one really, I guess, at the end of the day. What happens, happens. But I'm really happy that it happened as we came off of support late last week. We saw some buy signals. We saw that hourly chart. We looked at that on the S&P, I believe, yesterday, where we actually had that double bottom break happen on the hourly chart. So at least there were some buy signals to get us going. Here on the S&P 500, gotta like that we were able to push back above this old support slash current resistance zone with relative ease, closing well above it. I think that's going to be kind of the first place that I'm going to be looking as the new support level as the days go forward. What my hopes and maybe even expectations are is over the next few days, this 9 EMA, the short-term average that at least I like to use, will kind of catch up. We'll kind of, right now, I want to use that 9 as a support level, but right now it's way the heck down here, right? But in the coming days, there's a very good chance that that thing's going to catch up and at least can act as a short-term, support catalyst, if you will. And I'm going to be looking for that, in a lot of areas, generally speaking, going forward. But as far as challenges ahead, I do think we want to respect the 200-day moving average. However, with us being so sideways, because really we are sideways, in the last, month or so, right? It's a big range, and sometimes it's easier to see it in hindsight than maybe at the moment, But we can kind of see that we are kind of trading within an overall range as of late. I expect that 200-day moving average not to be as big of a deal, but I'll always respect it because I've seen way too many times it act as the reason for a halt or a reversal. So I'm going to be keeping an eye on that. We do have a little bit of room to run here before we even test that. And the same can be kind of said if we take out that. I'll kind of have that same approach with that 50-day moving average. Now, if we stall in either of those locations in the days to come, could be interesting for some potential bearish setups. Obviously, that's looking a little bit more ahead than tomorrow, though, I think, for sure. Over in NASDAQ, it basically filled up. You know, we kind of closed above that, got that momentum this morning, and basically filled up all of this space. I'll still contend that I think that the S&P chart is better technically than the NASDAQ. I still do believe that. Of course, everything was going up today. And one thing I do appreciate is that we were able to fill that space, which, okay, fair enough. Again, I never expected it to happen in one day, but that's kind of the way I look at charts personally is they're empty space. There's no reason technically it can't fill up this space. That's just the way that I kind of think about charts. So I like that it was able to do that. But beyond that, closing strong with the rest of the market, and actually, you know, not by much, but I would definitely say it did kind of close above what I would have expected to be resistance. So I do think that is another bit of a bullish signal. Again, as we look at the NASDAQ versus the S&P, though, on the S&P, we see at least what appears to be a potential double bottom. On the NASDAQ, we see lower highs and lower lows. So broadly speaking, you know, I still am skeptical when it comes to the NASDAQ. Again, if this is going to be, you know, that Christmas rally, I think the NASDAQ can certainly participate. But much like the S&P, I'll be kind of watching these averages. Obviously, the swing, we're a ways away up here. That's really the important level. You know, again, ideally, whenever we're looking at a pattern like this and we're thinking about being bulls, at least I'm thinking about being a bull, I want it to run up. I need it to pull back and put in that higher low somewhere, because for me, if you're not breaking resistance, you're not a buy. So again, we start dropping, we put in a higher low, you know, whether it's down here, whether it's up here, and then we take back off and break through what ultimately is resistance. We're a ways from that happening, but that's what's going to need to happen for me as I look at the NASDAQ personally. Again, over on the Dow, much like the S&P, looks more like the double bottom type of a pattern, whereas right now, as great as today was, the NASDAQ still looks like a bearish retracement too, just not ready to trigger into it just yet. Is all. Whereas on the Dow, much like the S&P, we've shown relative strength. We've held support. We were able to take out all of the moving averages, minus of course the 50, which is still a ways above us. That will kind of be that next area. Now, I'm not necessarily going to be surprised at anything, of course, but I don't expect us to run right back up to this high. I mean, it wouldn't shock me, because we all seen when the market goes crazy either way, it can move faster than, you know, we think, right? But I'll expect that it's going to work up into that area. But I'm going to be coming back to this support level here as kind of that primary support zone that I'm going to be watching on the Dow Jones, while these moving averages kind of catch up. In particular, the short-term averages, and even more particular, that 9 exponential moving average. And then lastly, over on the Russell, kind of a mix. On the one hand, we have what might be a double bottom. Right, we've seen this support level. We know that there was a lot of history at this support zone that it's, you know, shown this upward movement on recently. So that's something that is intriguing. On the other hand, we've been making the lower highs, right? And so I think I put the NASDAQ below the Russell now, to be quite honest with you, as far as ranking them from a bullish point of view goes. But I do personally like the Dow and the S&P better than the Russell. We've got a challenge up here that we're not too far away from potentially testing, along with that falling 50. Again, much like the NASDAQ, I need a pullback. I need some buyers to, you know, step in at a higher low, run us back and through some resistance, and then I can definitely change the way I feel about these indexes. But, you know, as crazy and as exciting as today was from a bullish perspective, it really didn't change my overall opinion on the indexes, or at least the overall way I've been looking at the indexes as of late. But I guess I was reading it was on the Dow was the best day in like 8 months or something. It was a good day if you're a bull, at least. So it'll be interesting to see you know, how we go. I don't expect another day like this again, and nothing should ever surprise us too terribly. But it'll be interesting to see if we can keep this momentum. I mean, the real thing that I like this time versus the last rally that we had is last time I was watching it for retracement, because across the board we'd made lower highs and lower lows. This time, whether I believe in it or not, I can clearly see why people are arguing for a double bottom, right? And so I do have a little more faith overall in this upward movement than I did back through here. At least that's my 2 cents on it. as we kind of shift into the sectors, it could have been a different day for the material sector. Early on, we were selling. It looked like it was going to finally be able to get a close below that support zone that at least I think has been a very important place to be keeping your eye on. And then, of course, Powell's testimony, the market starts reacting, and it goes along for the ride. And whether or not that matters, in reality, it held the pattern, at least in my mind. And I think that is a very important thing. I think if we close below 53, I think that is a bearish signal within the material sector. And I don't really want to look at the material sector bearishly, if I'm being honest, right now. I kind of expect it to be able to have a bit of a run in the month of December, or at least some bullish movement. But of course, you break support, all bets are off. I'm not going to put my money on that opinion by any means if you break support. But whatever it was, I mean, it definitely started. But again, the close is so important. I've learned that over the years. So many times it'll stick its nose below what I've identified as support, but support really is more of a zone than a number. I think most traders would agree with that statement. And I've seen too many times where it goes just above or just below on the intraday, but doesn't close it. For me, the close is always what's the confirmation. And at least right now, a little bit of an upward movement tomorrow, I could understand, from a sector perspective, looking into stocks from a bullish point of view in the material sector. Personally, we do have some overhead, but I think really our challenge, I'd like to see it take out that 9, because I don't like when, I don't like if I'm a bull and my moving averages look like this. I'm sorry, the 20. I'd like to see it take that out, but that's not a deal breaker for me. I don't really see why we can't work up to 55 if we can keep this momentum going into tomorrow. I don't necessarily think we have to get to 55 tomorrow, but I do like that as a potential development. And early on, I thought, oh goodness, I'm going to like that as a bearish development. Energy, it's one of those that I don't trust. I mean, regardless of my opinion, I think we can say that we've gotten back above that breakdown point, and I have to give that a notch as a bullish signal. But I don't trust that as a signal, to be honest with you, because basically everything was going up today. I don't feel like energy did this on its own merit. I might be wrong. I will respect that we're back above that breakdown point for sure, but I don't trust it. For me, any buy signals would have to occur breaking up here. And then potentially sell signals could happen up there too at, just north of $67. It definitely took out what could have been a potential bearish breakdown. At least for today, it did. And as long as we're back above that, I think the right thing to do is respect that support zone, because we've just seen it too many times. But I have a hard time believing just yet. I need a few more days to let it react before I'm willing to call it a bearish, a reversal off of that bearish break. Because again, going along with the ride on a great market day, good for you, energy sector, I still don't trust you. But regardless of my personal opinions, you do have to respect that we took that out, because we watched it dance there for a couple of days. It was fighting with it early, and that was clearly, and has been for quite some time, an important price point. So you do have to respect it, regardless of what your feelings might be or opinions might be. Over in the financials, definitely one of those areas that benefited from a strong day today, and of course benefited, technically in my mind, from holding support last week, closing above the 50-day moving average. We're not too far away from testing, a resistance zone, and I will expect that to be an issue for us, and I will expect the 200 to potentially be resistance, because this isn't one of those we're sideways, the 200's right in the middle type of situations, right? It's we're not sideways. It's not right in the middle, at least in my mind. But we do have a little bit of room to run to the upside again. Much like everything else, a pullback is not to be unexpected, I think, if that's the way it goes. But as long as we hold these support levels, that's, I think, what's important. The next couple of days in the in this sector and so many sectors, and indexes that look like this, those short-term averages, whether you use the 9, the 13, the 8, the 10, whatever moving, short-term moving average you personally like to use, those should be catching up in the next couple of days. As long as we don't completely free fall or skyrocket again tomorrow. Then it'll take a little bit longer if that's the way it plays. Over in the industrials, we kind of looked at it yesterday where it kind of really started to go sideways. Again, a pretty good signal today. I think from a technical point of view, yes, the market was bullish. Yes, everything went up. But we kind of talked about yesterday, we'd really spent the last 5 trading days establishing a trading range. And so taking that resistance level out, forget about why or the news of the day. That was a bullish signal, right? Just like we talked yesterday, if we take out resistance, that's going to be a bullish signal. If we take out support, that'd be a bearish signal. So I think that was actually one of the cleaner areas from a technical point of view, easier areas to trade into today, just because of overall where the sector was. Kind of a week's worth of consolidation and then breaking whichever way, of course, this time to the upside, is a little bit of a bullish signal. We've now created that higher low. So again, I still think this is a primary support level that we're looking at in the short term. We can maybe look to the, this old resistance to act as a support zone, and that would be something I think would be reasonable to do as well. But not really a lot of resistance until we get up here. I want to be careful with this sector as a whole personally, because again, it's one of those where we've made those lower highs and have yet to make take any break of resistance, right? Now, we did break out of this week's worth of consolidation, and that is good. But from a longer view, we've yet to take out a previous swing high or anything like that. And so I will be a little more cautious, but I do see some potential upside within this area as long as that, the support level can hold. I'll definitely be very mindful if we approach, the 73 or so dollar mark. That should be a fairly reasonable challenge for the industrial sector. Tech, much like NASDAQ, that was kind of the one of the big winners in a day full of big winners. Another strong day over in tech as we, of course, gapped kind of above the that old support zone and started the day with that acting for us instead of against us, which is the way it could have went. Yesterday we were working our way into it. Today on the gap we opened up above it and actually had the benefit of using it, closing strong here today. Again, tech's kind of in a weird spot for me right now because the chart is just not as good as other charts, in my opinion, whether we're talking NASDAQ or the tech ETF here, because it still looks, a lot like a bearish retracement where we're making, lower highs and lower lows, right? We just are kind of in the upward swing. So I still can't get behind it. But on the other hand, there is upside in this area in my mind, and maybe more so than the typical, sector. And so I do see some upside. So what I'm really hoping for, just like the NASDAQ, I'm really hoping for what appears to be a retracement to develop, creating a higher low, and then making another move, taking out resistance. Obviously, we'll see if that happens. Right now, obviously a strong day here today, but I have a hard time getting behind tech and the NASDAQ as a whole because of that reason. I understand that they can go up, and I do think that they are an area that has more upside than other areas, or at least a lot of other areas. But I guess until you break resistance, I just have to cheer for other people that are trading you, and I'm okay with that. I'm all right with cheering other people. Staples, of course, another strong day here, another clean entry in my opinion within the staple sector here this morning. We had it yesterday too. There was certainly, people, of course, jumping into the staple sector yesterday, having closed right at that old resistance level, looking at that momentum to continue into this morning. That is what happened. So pretty clean entry into it. We're kind of in that upward trend. Really, we've got resistance up here. It's one of those things, basically the trend suggests that we should go, test resistance and even take out resistance before we break support. And so I do think that overall that continues to be an area that we can look at from a bullish perspective. Broadly speaking, I wouldn't, be looking at the overall sector from a bearish point of view. There are, of course, stocks in that are probably going to look pretty good bearish if you go through enough of them. But overall, I do think we kind of continue to treat the staple sector a lot like we have. Now, if this is going to be the start of something bigger, if this is going to be a reversal, a bottom, however we want to word it in the broad market, this is generally not the type of area that's going to benefit the most from that. And you hear that a lot. And while I do agree with it, at the same time, I think we can take it too far. While the market was, doing all right over the course of the summer, the staple sector was doing really nice too, right? So, it's not like these more defensive areas have to do poorly if the market's going up. There is some logic to the it's, more people are more interested in tech and the higher growth things when the market is in an upward swing or is bullish. But it doesn't mean that boring old staples can't go up too, right? So, something to keep in mind overall. But really, as far as we go here, we really don't have any great reason. As long as we hold above 54.50 or so, the support level here, I can't see any real reason why we wouldn't look at the sector overall as bullish. Setting up a higher low, already made higher highs, so pretty strong sector. And I know a lot of things were setting up yesterday and even late last week within that sector. So hopefully, if you had any trades in there in that sector, went well today. Over in the utilities, I don't even know what to say about utilities anymore that I haven't said so many times. They exist. They are still fighting at resistance. They still don't know what they want to do. That 55 to 55.50 area just continues to be a brick wall. No doubt about it. Wouldn't expect utilities to have a great day on a strong rally day like we had today. So I'm not really surprised that they didn't really do much of anything. I think the bigger story is the no story that it's been for a while. I think we're sideways in utilities until we can cleanly get a break. I think that's the way to do it. And I think if you ever, sometimes I get crazy, and want to think of things, but I always go look at this weekly chart to remind me how sideways it actually is. The day-to-day can, catch your attention and do all sorts of weird things. Looking at the sector on a weekly chart, it really just shows that we are sideways. And until we get a break, I don't really see a great directional trade within the overall sector developing. Healthcare took out resistance here early and basically ran right back up to the previous resistance level, an area that, I think was the best technical area, not named staples and maybe real estate during the course of the last little while, having cleanly held its 200, having cleanly held its support level and showing upward movement. Obviously, this is a fairly respectable level of resistance that I think we want to keep an eye on. But I do think, like we said before, if we're able to take that out, there really isn't a lot of overhead for another couple dollars within the ETF, which presents opportunities, at least potentially bullish opportunities within that sector. And so, it's a pretty strong day. Again, ideally, what I would like to have happen is to consolidate for a day or two, pull back, and then take another run. But I'm going to be prepared for it to potentially break as early as tomorrow, not expecting it to break. I expect resistance to be hard for it to break, but I'm always going to be ready. If something that I'm interested in closes at resistance, I'm going to be ready tomorrow morning, in case it does break it, of course, because that's what a breakout is, right? Sometimes resistance does get broke or support does get broke. That's how we get breakouts to begin with. So it'll be really interesting. Very strong day, though. One of our stronger areas and a very strong day, no doubt about it. It filled up that space fast, no doubt. Bounce off of support and skyrocket. Yeah, it had a little help from the Fed here today, but impressive. Over in the discretionary, a very strong day. A very strong day as we try to work our way back into respectability within this sector. This one's tough because this is that Christmas rally or one of those Christmas rallies areas. So many of the charts within the sector, not all of them. There are some that are interesting, but so many are just ugly, and they're still ugly. Right now, even after today. But we are seeing, quite a bit of price appreciation over the last week or so off of the low point, no doubt. This old breakout point, this is a breakout point, a support zone, also lining up with the 200, is not too far away from us. That should be our next reasonable technical challenge. Let's see if we can, how we respond as far as a potential pullback. Again, ideally that 9 EMA is going to kind of catch up with us over the next little bit. Try to find an example of that here. We had this big jump well above the 9, and then ultimately it slowly starts to catch up. And I don't know if you guys can see this, but ultimately as it kind of catches up, it starts to act as a little bit of a support zone. That's what I want to see, and that's how we're always looking at these big moves. Let's let these short-term averages catch up. But really, watching that 200 is probably where my eyeballs will be focused on the most. There's still, I think, the best thing from a technical point of view for me personally is some sort of a pullback and then breaking whatever ultimately becomes resistance in that scenario. I'm never great at, things that shoot straight up or fall straight down because the signal isn't there. Yeah, it's bullish, it's bearish, but the technical signal isn't there, which to me, this technical signal is always a break of support or resistance, where, whatever side that might be on. But again, regardless of where I sit on things, very strong day, one of the stronger areas, again, in a strong day, up almost 3% in this sector. So be interesting to watch this one develop, independently of everything. It's always interesting, but independently be interesting to see how this area does this December. Over in the real estate, more price appreciation as we kind of bounced off of that 20 early in the week, are now working our way closer to resistance where we're kind of at a short-term resistance area. But really our major overhead is there about $34. I think we just continue to treat it like we've been treating it. The breakout is kind of the primary area that I'm looking, but short-term averages / this fairly steep and long-term unsustainable, but short-term, no big deal, trend line as a support zone. But it'll be interesting to see. It does appear, and it's hard to read, with just, in such a short time period, if it wants to be slowing down at resistance or if it's, got a good run back up to 34. It'd be interesting to see how we respond to this area that we're pretty close. That 33.50 range or so is kind of our previous swing high zone, not very clean because we really shot up, on this day. Right, we really tried to make a run at 34, in 2 days, and it just didn't pan out. But I really expect ultimately 34 to not be too hard for us to work into in the real estate sector personally. And lastly, over in the communication services, it got in on the fund and it closed at its 20-day moving average. Again, this is one of those areas that is just going to have a hard time selling me because of how ugly the trend is. When I see things that have signals that have broke resistance or took out major averages or whatever, and then I see things that haven't, I'll respect the price movement, but I'm not going to get on board with the price movement. And right now, just calling it what it is, these guys have done nothing since their inception but make lower highs and lower lows. Again, for me to turn around, I'll be looking at this as a bearish retracement area personally. Now, Facebook, Google, remember, these guys are huge components of this ETF. They make up a very, very large percentage of the overall percentage. So that's why this thing's been so ugly in some ways, because while the sector hasn't been all that great, Facebook and Google overall have not been doing well, and they're very heavily represented within this ETF here. So it'll be interesting to see when we get that pullback again. If we can get a pullback, and I do think this can be an area that might be interesting for some bearish retracements maybe going into next week, but that may not be the way it develops. If we're able to put in a higher low, take out what ultimately ends up resistance, it also could be a really interesting reversal area. We just have to see it before I believe it, at least. So, but again, another strong day. I mean, basically, you were a winner today in the market, whether you deserve to be or not, whether you were, sector that had been, struggling or doing well. Basically, it was a day where everybody plays, everybody wins in the market, and that's okay. But those aren't every day, right? So it'll be interesting to see what areas are able to continue some of this, unsustainable momentum. Of course, we're not going to probably move up this dramatically every single day or down this dramatically every single day. But it'll be interesting to see who's able to carry on the momentum. I'll be looking towards the prettier charts, the uglier charts, the NASDAQ, the communication services, they're going to do what they're going to do. I'll be going into what at least I think are prettier charts. Of course, in a day where the Fed speak is kind of the news of the day, no surprise the dollar is a casualty, and we did sell off fairly significantly within the dollar, working back into that trend line though. So from a technical point of view, hasn't really changed in my mind as far as that goes. The real changing point would be here. Now, with that said, if this little trend line that we've kind of developed over the last little while, if this thing is to be violated, I wouldn't really be shocked at all if we work back to 96. Honestly, those are my expectations. If this little trend line falters, working back to 96 to the 50-day moving average, where that's potentially a real technical test, with it being the 50, with it being that 96 that's been in play on multiple occasions within the dollar. We'll have to wait and see. The trend line held today, right, amid quite a bit of selling. I do think the right thing to do is respect that trend line, but I'm not going to be terribly surprised if that thing does give out that we're at $96 in the relatively near future, which I would consider that the more major test. That breaks, and that's a fairly bearish signal in my opinion. Obviously, we're a ways from that happening. But regardless, holding up here today, people willing to come back in off of that trend line. And so the buyers are still out there, right? And as long as we continue to see those bullish signals, whether you're on board with taking those trades or not, you could see why. You could see why. That's been a moneymaker for people as of late. So I certainly understand. Over in the metals, while there was some movement, I don't really think there was much to see. Of course, that has been my broad stance for quite some time in the metals. Gold reacting off of that old zone of resistance, old zone of support that it closed at here yesterday. But again, like a lot of traders, I look at this from a neutral perspective and think we really need a clean break, down here or up here for an actual signal. So for me, nothing has changed in the gold market, and then really in the silver as well. We did kind of bounce off of that, that old support level that we closed at here today. Again, if this support zone breaks, I could see some short-term trading opportunities working back to the downside from a little bearish breakdown point of view. Maybe to illustrate that point, go into a little bit of an hourly chart. You can kind of see, well, if we break this, there's really nothing here, right, until we get to that support level. That would obviously be probably better suited for something I'd be maybe watching if I'm watching this on an intraday basis than a swing basis. I guess you could arguably, buy off this bounce, but again, I really personally believe with silver and gold, it's best to treat them sideways right now and wait for a clean break. For me, that clean break on silver is still at $15, even though we're a ways away from it, and I don't know if or when this is going to happen. I mean, there probably will be a when. It just might be a ways away, right? But right now, I still think it's overall neutral in the metals market, at least when we're talking about gold and silver. Natural gas really responded here today. We, of course, came off of $4 yesterday, saw that upward movement. Weren't really able to have a very clean or good-looking close on yesterday's candle, but we were able to take out the previous day's high, working. And, of course, as natural as gas is prone to do, it's not afraid to run 12% just because, right? So it continues to be a mover and a shaker, closing towards the top of the zone here today. I still think it's not shaping up for a great swing trade. I mean, it did. It happened quick, and happened volatilely. And so I'm sure some people were taking that trade. I sadly was not one of them. But now we're closing a resistance. Let's watch this area around that 480 mark. But again, it definitely is a zone as you're looking at natural gas, I think. And lastly, of course, the party did not extend to our friends in the crude market, as down over 3%, closing very, very close to that psychological 50, to that short-term floor $50 mark. Not a good look, crude. We talked before, beyond 50, and again, everybody's going to have their own two cents on this, and that's okay and understandable. But for me, a break of 50, I really don't see any support until we get into that 43, 44 range. I just can't see any reason. I can see why someone would buy it at 50. I wouldn't dare, but I could see when people were buying it back here at this trend line. I wouldn't have done it, but I could see it as I look at crude. If 50 falters, I really can't see any real great argument from a technical point of view, at least, to buy it until 43. That continues to be a very bearish area. Let's see if 50 can hold up. Ideally, 50 holds up for 2 weeks and then breaks down. That would be the great signal, in my opinion, where we just go sideways, hang out for a week or so and then break. But we'll see if I get what I want. Knowing crude, it'll break tomorrow. So that's what it's been doing, right? But certainly not a boring day in the market as we wrap up with the market recap here today. Certainly was not dull. Of course, that's going to do us here today. But as always, ladies and gentlemen, it's certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell if you haven't already. And be sure to follow us over at Tackle Trading on Twitter as well to keep up with some of the interesting things that we're finding throughout the trading day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that it's helpful and that we're on the right track over here. Thank you, Ed. Thank you, Whitney. Everybody, thanks for joining me. As always, guys, it is certainly my pleasure. Get out of here. Happy trading, and I will see you all in the next one.